best information, and our listeners like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Whoa!
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Brandy.
Bye. And good afternoon. Okay, so everybody's happy today because inflation's lower. But when you go through the numbers, I don't know why they're happy when gasoline rose by 4.1%. If you've gone through these numbers, it's insane what they're doing. But before I begin with that, gold, again, everyone's concerned it's on its way down again. But don't be concerned. Now, you only should be concerned, I should say, if you don't know how to sell short. Now, if you know how to sell short, we've been teaching people how to go long and short since 1998. We'd love to help you. If you don't know how to sell short, again, I think gold is going to make a new high. Okay, and I'll explain why in a moment. So I wouldn't worry about it right now. We'll look at our charts. They haven't turned red. Our Pro 2 chart, which is always accurate, always correct, hasn't turned red, but we'll look at that. But first, let's get back to why they're so happy. They're going, oh my God, we're going to get a rate cut. We're going to get 2 of them. Things are so good. What are they, nuts? First of all, the CPI, year over year, August, was 2.9. Now, that's August. Now, September comes in. And September is higher than August. So inflation rose from August to September, from 2.9 to 3. But wait a minute. But they got all excited because they go, oh, wait a minute. I see. So August, the CPI was 2.9. September, inflation is much higher in September than August. But because in September we thought it was going to be at 3.1, but it came at 3.0, let's celebrate. And the market goes up 500 points. I don't get that. In other words, so they go, wait a minute. They should be saying, oh my God, look at this. August, inflation was 2.9. September, it's up. We're up. Gasoline's up by 4.1%. 4 of the 6 major grocery store food groups, all up, all increased. But because they came in lower than they expected to increase, to the point where they expect to increase, they don't care what it is the previous month. In other words, when you compare month to month, everything's gone up. But because it came in a little lower than expected, it doesn't matter that it's still higher than the previous month. Oh my God, you gotta be nuts following this stuff. That's why, look, when you're trading, just follow pricing, which means you follow the money, okay? And for God's sakes, learn how to sell short. Because if you know how to sell short, you know how to go long, you're gonna do just fine because you don't care which way these nut jobs express the numbers. They're always going to express it one way or another to always move the market up. So like today, the market's up 500, and you think they'd say, oh my God, inflation's rising. In fact, you think they'd say, look at this. The sentiment, consumer sentiment, is falling. Well, it's falling because inflation's up from August to September. But it's at a lower number than they expected in September. Oh my God. So again, none of this makes any sense, especially when gasoline's up 4.1%. What else is up here? Let's see. Cereals are up 0.7%. Dairy declined a little bit, but who cares? Because all they look for is the estimate to be lower. So let's say September inflation was at 10%. in September. Just pretend for a moment. Let's do this right. Where's my pen? So let's say September inflation was 10%. And let's say October, we're in now, inflation's at 20%. Or let's do it this way. September inflation's at 1%. October inflation's at 20%. But because they thought inflation in October would be at 21, and it came in at 20, the market goes up 500 points. They don't give a damn that we went from 1% September to 21% in October. Now, those aren't the real numbers. I'm just making those numbers up, trying to make a point. That's how they do it. They only look at the expectation. Jeez, God. Anyways, all right. Rent's still going up. I don't care. Wherever you go, try to find rent. People are hurting. Because the reason they can't, because when you have a medium price house at $439,000 in this country, a beginner home, a starter home at $439,000, you got to make $125,000 a year to qualify for that house. How are you going to do that? You're not. You can't. Isn't that unbelievable? So they're saying how great things are. No, they're not. So anyway, so that's what's going. So let's get to what's really right, what's serious, what we want to look at. So gold. So gold's pulled back a bit, and you see it on my chart right here. But I've been telling everybody gold's going to pull back. How long have I been saying that? Because we've been in the miners, and the miners are up 92%. I keep saying, do you realize the miners are up 92%, and nobody's taking profits? I said, we're going to start taking profits. And then when the banks came out on October 10th and said, oh, they're upping their forecast for gold to 5,000 an ounce. And I said, if you don't take your profits now, you are nuts. Because that's now when it's going to go down. It's going to go down. I said, it's going to go down at least 5-7%. It's going to go down. And sure enough, it did. But as I told everybody, don't panic. Because when you look at our chart, we only care about where's the money going, pricing, price action. Where's the money? Is money coming out of gold or going in? What's going on? So let's take a look at it. We'll get rid of this chart, the gold chart, okay? And if you look at, let's go to our GDX here. I'll bring it all the way back down here. Okay, let's go to gold, GLD, the price of gold. The ETF GLD follows the price of gold. Okay, we hit a low. Remember, we hit a high on October 20th of 403.30. We hit a low 2 days later at 368.93. And we're back up now to 378. So it's holding, okay? And it hasn't broken through the 50-day moving average. The key is we don't have a defined crossover, which identifies you better sell short. We haven't got a sell short signal. When our stochastic hits 80%, our candlesticks automatically would turn red. That's the beautiful thing about our Pro 2. Your chart, your regular chart, you don't have that, okay? It has green, red, green, green, red, red, green, red. It's like a Christmas tree. And that got me so frustrated that back in 1998, I designed the Pro 2 because I wanted to follow the money. The money is pricing. I wanted to follow my price of my stock. If it's going up, I want you to tell me, is money that means money's going in, so show money's going in. Don't give me 3 days of red candlesticks, 2 days of green, one of blue. I don't want any of that. Nobody did. So I designed my own chart. And since then, 225,000 people have used this chart because it works. So look at this. So it's all green. It pulled back. It's all green. So it's telling you not to panic. So you take some shares off of your GLD, put your stop in. Don't worry. Don't short it yet. We'll let you know when to short it because the chart candlesticks will turn red. They won't turn red until it's time to short. Okay, that's the beautiful thing about Pro 2. Now let's look at our miners, GDX. Now remember, I told everybody this was going to happen. It fell about 5-6% in one day. The high was October 16th of 85.09, and the low, again, was October 22nd of 70.28. Now, today, it's 72.94. So it's telling you, and my chart's telling us, it's not a short. We don't have enough sellers here yet, not to worry. It will tell us when we got to worry. It will tell us if the green candlesticks will only turn red when I get a signal on my Pro 2. And that's when the stochastic rolls over, goes through 80, it'll turn red, then we start shorting. And that's why it's so important to learn how to sell short. Can you imagine you sitting there and all of a sudden gold starts going down and you don't know how to sell short? You just sit there and you hope it keeps going down. You hope it stops. You hope it stops. That's crazy. If you know how to short, it doesn't matter. And this is why 90% of people in the stock market lose money. They don't know how to sell short. Okay, so don't worry about gold right now. If gold GLD or GDX, the miners, break through the 50-day moving average, then it's time to worry, especially if you have my Pro 2 chart and it turns red. But now, as we said to our gang members going back on October 8th, when we all of a sudden gold took off and hit 4,100, I told them to start taking a lot of their profits. And then on October 10th, when the banks came out and upped their estimate to 5,000 an ounce, I said, take a lot more and a lot more profits. Because what's going to happen is we're going to have all the tourist investors who are FOMO investors. These are people who don't know what they're doing. They don't want to learn. They always chase stocks at the very top, okay? And so I knew when the bank said, hey, guess what, man? We're going to hit 5,000. FOMOs would come in like crazy, push the market up. I said, that's an opportunity to take all our gold miners and GLD and sell into that rally. Don't get out totally, reset some stops, and let's see what happens. And depend on Pro 2, it hasn't turned red. So we're good with gold, so don't panic with gold. POS, we're good with POS as well. I'm a little concerned about POS because POS has been worrisome, okay? I don't like silver. I always like the miners, GDX, because here's why. Because miners, whether they're mining gold or silver or copper, they got to get the stuff out of the ground. They're real companies with real earnings. That's what you want. You want to get stock of the company is pulling that stuff out of the ground. And that's why GDX is up 92%. We got into GDX. The first time we got into the GDX was we started to get in on January 29th, 2025. I'm sorry, no, sorry. 31, January 31. We caught what we call the sweet spot, a buy signal. And then we stayed in it pretty much, okay, until we got to about May 8th. And we took most of our profits and we just left the scout on one share to see what's going to happen. Then we had this wonderful pattern. Remember, you have, when you trade stocks, you have 5 buy signals. That's it, just 5. You have what we call a V pattern on a line chart, a W pattern. You have what we call engulfing pattern, where one day's candlestick is larger than the previous day. There's 3. And then you got 2 patterns, 2 significant buy patterns. One's called the flag pattern, and one's called the consolidation pattern. 5 patterns, that's it. That's all you got to know is 5 patterns. So we found a beautiful consolidation pattern that was going sideways from May 29th to July 30, and when she went up, started to break out around August 5th, we bought. We've been in it ever since. So August 5th, this was our biggest run. Give me the number, Willie. August 5th, we about $55, and we took profits when we were about $82. 55. How much is that? That's a 49% gain. That was our biggest gain. If you had the two little gains, we're probably up about, I don't know, maybe about 60%. So now we took most all our profits off. We don't have a lot of shares left, but we're staying in so that if all of a sudden we get a sell signal on GDX, turns red, we'll sell short. That's why you got to really look at this Pro 2 color-coded chart. Now, a lot of people, I remember I built this chart in 1998, and I've had a lot of people knock this thing off, and they screw everybody, okay? They make them think that all you got to do, they'll change the colors. They'll say, well, if it's green, you buy, purple, you sell, and that's all you have to do. That every time it's green, you buy, every time it's purple, you sell. It doesn't work like that. Not at all, okay? It helps. It aids your chart, and it gives you a high probability of success. It's a tool. So anyone that says, oh, just buy what is green or sell what is blue, is a bunch of BS. All right, I'll be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grandy of philsgang.com. You know, over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. You know, I have a team comprised of successful investors, all with proven track records, and Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back. Okay, if you want, join my gang, go to philsgang.com, because we are your only insurance policy if this market does crack, and it will, they always do. And instead of getting wiped out, sitting there, watching your 401k going down, you can't do anything, we'll show you how to hedge your 401k so that you can sell short, okay, by buying the spiders, SDS, it's called an inverse. So check us out. It's free for 10 days. We'll show you how to do that so you're not going to get killed with your 401k. Now, the other thing is that, remember what's going on here. We had a crash in 2000. And the reason we had a crash, there's quite a few reasons, but the main reason is the total value of the aggregate of stocks, all the S&P stocks, to GDP was insane. It was at 150%. That's insane. So we had a crash. 2007, it was at 100%. The value of all of the stocks as an aggregate to GDP ratio was 100%. It's twice that now. So why isn't the market collapsing? Why isn't it crashing like it did in 2000, 2007? Simple, because again, the market won't crash as long as we have leverage. And what's leverage? Margin debt. Now, if I could just explain this, you can see my chart here for a moment, okay? As long as we keep putting in tons of money, as long as they keep increasing the money supply, let me show you what I mean by that. If I put up let me get a chart for you that shows increased money supply. I think we have one to show, Willie, don't we? Let's see. Let me just check this out. Money supply. Let's see if we got one in money. Yeah, we have right here. Okay, so here's the money supply right here. Oh, here it is. Perfect. You see how the money supply increases the stock market? It pushes the stock market up. Now, at the same time as that this increase in money supply, see the blue? That pumps money. See how it pumps money back here? It pumps money into the stock market, so the stock market keeps going up no matter what happens. Every time the stock market pulls back with a hiccup, COVID or anything, it will put money, they will start again printing money, and they'll increase the money supply, and it pushes up the stock markets. And people keep asking, well, but aren't we going to have a crash, especially when we have margin debt, okay, like we have? And now think about the argument why you should have a crash. First of all, we have such a disconnect between the stock market and the economy. The stock market and the economy are not the same, not even close. So this open AI that we started, the hype is far much greater, far larger than the returns that investors are getting on their money that they're investing into deals like when Oracle partners with OpenAI. Now, the run rate right now to keep this OpenAI going, the run rate in these centers, okay, of investment is 1.5 trillion. Now, they only this year here they put in the last 8 months 54 billion. Their run rate is up to 1.5 trillion. That's amazing. So that's why the stock market will continue to go up and go beyond the dot-com. Now remember, the dot-com crash happened, okay, when we looked at Buffett's indicator, which is the value of all our stocks, okay, versus the GDP ratio. When it gets crazy, like in 2000, take the value of all our stocks versus our GDP ratio, it was at 150%. That's nuts. It should be half that. So we had a crash. In 2007, 2008, the financial crash, we were at 100% of GDP. In other words, our publicly traded stocks to GDP, to the growth, is 100%. Insane. We had a crash. The mean is about 100%. Today, we are at twice that, 200%, but we're not crashing. Why? Because AI, even though we got this big disconnect with the stock market, I mean, think about the market. We've had S&P gains since 2008, 358%. 358%. The NASDAQ gains since 2008, 1,200%. I think it's 2,000% now. 2,000%. 2,000, not 1,200. It was 1,200. It's 2,000. I better change that before I make another mistake again. Hold on one second here. Isn't that insane? Think about it. The NASDAQ since 2008 is up 2,000%. Imagine if you put in $1,000. Okay, now that's the S&P and the NASDAQ. Okay, these gains are incredibly crazy. So there's a disconnect between the stock market and the economy. Now, the AI is causing all this because it's so new. People are so hyped up. They're going to put 1.5 trillion in. People are going nuts with the tech stocks related to open AI. Which one is that? Those are the semiconductors. AMD and Intel are two of the biggest, okay, semiconductors. Now, the other thing is that even though this AI bubble is far greater than the dot-com bubble, which finally when it crashed because of the, remember, because of the value of the stock to GDP, the ratio in 2000 was 150, okay, in 2000, 150. And it's far, I mean, it's crazy. But it's not. But we're not getting a crash right now when we're at 200, or we're not getting a crash when in 2007, 2008, the value of all stocks to GDP crashed when we were at 100. We're now at 200. It's not crashing. So what keeps this going up is the hype, because this is all new. So you're going to see this market, I believe, outrun the NASDAQ. When the NASDAQ crashed in 2000, the dot-com, it went down 80%. We are so far beyond that right now. And people say, well, why won't it crash? As long as they keep increasing the money supply, they are not going, this market will not crash. Because what do they do with the money supply? They keep pumping money to leverage everything into the margin account, margin debt accounts. As long as we keep pumping money to margin debt accounts, and all these tourist investors are going to keep jumping in and keep buying because they don't know any better. Now, when you look at, for example, let's take the S&P 500 here. Isn't it amazing to think out we don't have a crash, but yet there's only, out of the 500 stocks, they've been lying to us. There's only 10 out of 500. 10 out of 500 that have earnings. The other ones don't have earnings. So think how dangerous the S&P is. You have only, think of it this way, only 10 of 500 stocks have earnings. Those 10 stocks are being relied on to mask and to cover up the tremendous weakness underneath the hood. And what else are they depending on? Okay, again, continue to print money. And when they say inflation is not up, every time you print money, inflation is up. Now, the next thing you look at is job openings. Remember, to have a good economy, you need the economy to grow. You need consumers to consume. They're not consuming. Consuming's down. Their confidence is down. Why? Because of the jobs. Job openings are horrible. Take a look at the U.S. job openings versus the S&P. The S&P keeps going up because it's manipulated to go up. And it's manipulated from the increased money supply. As long as they keep printing money and keep shoving it into the hands of CEOs to do stock buybacks, as long as they keep printing money and shove it into Wall Street to keep shoving it into their margin accounts, so that the FOMOs, or the tourist traders, I call them, will keep buying every time there's a dip, we could go on for a very, very long time. We're so far away from a crash right now, it's incredible. So you got the S&P, that 10 stocks are pulling away from 500. I mean, to me, this should blow your mind. I mean, think about it. 490 stocks have no earnings, none. Margin debt is just nuts. And again, that's the leverage, the money supply. And we're outpacing where we were in 2007 and 2000. We're outpacing it. And the other thing, if you think about job openings, that's the biggest thing. The consumer's everything. The consumer's got to consume to keep this country going. They just came out today. Gee, do we have inflation or don't we? Right? Oh, yeah, we had inflation. We got higher inflation here in October compared to September, but we're going to party because these aren't the real numbers, but this is what's going on. Oh, in September, inflation was 10%, but in October, it's 30%. But we thought it was going to be 32, but because it's 30, wow, let's buy. That's what they're doing. That's how stupid this is. Think of it. So what do? You just always follow the money, and you'll constantly make money if you have the skill of the short. Because when you have the skill of the short, you don't care anything about these numbers. You don't care where inflation is. You could care less where inflation is. You could care less about the job openings. It's all about following the money. Your safety net is learning how to do both. Buy a stock when it's going up. There's 5 buy signals, and learn how to sell it short when it's going down. Don't get caught like you did with your 401k from February to April. Most of your 401k was wiped out. You only have a return this year of 5% so far. Isn't that insane? When we have a gain, okay, of 36% since April in the S&P. How can you be happy with 5% in your 401k? You can't. Manufacturing is over with. They keep telling us, oh boy, all these manufacturers are coming back from Europe. They're all going to manufacture. Look at this. That's a bold-faced lie. Look, this is the truth. I just got this one. Look. Here's all the manufacturing. Look at the jobs back in 2001, 2022. Look what's happened in 2020. Look where we are today. We're negative. But they'll tell you on TV every day, oh, look at the manufacturing jobs we got. Beautiful. No, they're not. And then when you look at the debt, if you really want to know how your country's doing, the economy, look at freight. How much freight are they moving? Look at this. When we had a crash in 2008, our crash in 2008, what did we look at? Freight. That told us the truth, how the economy's doing. When your freight starts contracting, you're going to have a crash or a correction, and we did. Take a look at 2020, right here in this chart, when our freight shipments dried up in 2020. Our charts just started to turn red, warning us. They coincided with the freight. Just turned red. We shorted. We were in position. Then when the market crashed, we were making money on the way down. You're going to love investing in stocks once you take control.
Don't forget Instagram.
But you got to take control by shorting. And don't forget, for all my listeners and gang members, I'm going to start again next week on Instagram, where I do these short segments, about 15 minutes. And you can ask me questions. I was doing that for quite a while, and then I went to a longer segment.
10,
and so now I'm going to keep that long segment,
7,
but I'm also going to add back the short segment where you can ask me questions. And we'll start that next week, and you'll get your alerts, okay? All right. Don't listen to what all these people are telling you. Listen to your charts.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.